But look, you had spotty growth, you had 3 Fed rate cuts, you had the worst yield curve in a decade,
right,
and the largest banks came through in spades. The largest banks grew EPS by 10%. So the resiliency, I mean, just like with Rocky, you take a lot of punches and you get scrapes and bruises and you come through it strong. Bank stocks in 2019 were like Rocky Balboa.
Okay, so what's it going to be in 2020, and has the run out?
No, this is a multi-year theme. So to pick another character, David and Goliath, you know, Goliath is winning. So here's the one statistic that you need to know about bank stocks in 2019, which we think continues into 2020. And that is the 3 largest banks,
right,
Citigroup, Bank of America, and JP Morgan, increased by 45% in 2019. That outperformed the S&P 500 and the top 50 banks by 15 to 20 percentage points. So talk about Goliath is winning. Goliath is really winning. So I brought my David and Goliath here. And I know David is the crowd.
Price for perfection in 2020 at this point?
No, absolutely not. And fine, we will recognize that 2018 was not a great year for banks. So some of this was a catch-up from the underperformance last December and last year. But absolutely not. I think what's underappreciated is this multi-year theme related to technology. I mean, a lot of people are watching the waves lap up on shore. They look at things like net interest margin is down 3 basis points or loan growth is slowing. Meanwhile, you have this mega trend of technology that should take banks to the best efficiency in their history in a few years.
Yeah, I would just say, for whatever it's worth, I very much agree with Mike. Maybe more for more prosaic reasons, that I am actually watching net interest margins, and now you have the 10-2 spread, which is as wide as it's been in a year. And from a valuation point of view, it's hard to say they're priced for perfection because a lot of these stocks are trading at well below 2 times.
If you had to pick, value. So you like the top 3? Do you still like the top 3 banks?
Still like the top 3. Citigroup.
Right.
And by the way, I love the fact that an activist is in the House, and yesterday they said they're going to stay in the House for at least 2 more years, and they can still go for a board seat in a year, and I think behind the scenes, they're pushing management to do better. Bank America, what a great fintech company and a bank. They've doubled mobile banking in the last 5 years, and they're doing amazing things ahead. And then JP Morgan, you know, best in class. And we would add to that group, especially in the short term, Goldman Sachs is having its first investor day in its 150-year history, January 29th. That's the first time they, show what's happening behind the scenes. You get to see management. You get to see the talent. And by the way, one of the greatest off-balance sheet assets at Goldman Sachs is their culture. So we get to see their culture up front and center.
Where does Wells Fargo in your situation land? We had Bill Daley on the 6 o'clock hour, who's now the Vice Chairman and Head of Public Policy.
Well, that's the one bank I don't cover since I'm at Wells Fargo Securities. If you want to see what I think about the CEO, you can look at CNBC.com. Hugh Son did a piece 2 years ago talking about what made JP Morgan successful. So pull that up, and he's the CEO now.
Wanted to comment on that.
So, Mike, let me ask you about, in terms of organic growth, do you see the velocity of money has continued to decline? Do you see much in the way of lowering credit standards to spur more loan growth? Or because it seems to me credit standards are still pretty high, obviously because of some of the capital restraints, but is there more to go, perhaps, on that side?
Well, that's part of the main themes for the banks. I mean, remember at the start of the decade, I was calling to break up the banks. All right, we were saying banks were a mess, they should be broken up. Thank you, regulators, for ensuring stronger and more resilient banks. And so banks better not be lowering credit standards to get growth. No. And that's one nice thing about banks. Banks now are managing for returns, whereas before the financial crisis, they were managing for growth. So if you have to not lend a little bit extra, that's just fine.